Okay, Tom, I'm going to keep hitting you with these videos, all right? Um, so this is a little later in the morning. Um, as you can see, as you can see, we've been in an uptrend ever since that bounce off that 26 I showed you earlier. And I caught that small gainer down here. We've been in an uptrend, and then we have um, there was a pullback here, but you didn't really get a doji or a hammer. Um, there was a pullback here, but you didn't really get a doji or a hammer. Now there was a pullback here, and you got kind of a doji, but you definitely got a hammer, right? You cannot say that's not a hammer, right? So I didn't like this doji because it had such a big top wick, which means sellers are stronger than buyers. But this hammer right here was good. So I did put the fib box on it. I did like it for a bounce, especially because when I put the fib box on it, what do you think coincided with the 50%? That's right, the 77. And we know 77 can be a great place to take trades from. Okay, so it's almost exactly at the 77. And I'll say it, I've said this a lot, that's no coincidence. A lot of times you'll get naturally aligning confluences when you do this, okay? So I saw that hammer. I liked it because why? We're in an overall uptrend, okay? But this was a short-term downtrend, and it left it with a hammer towards the end of the downtrend. So now, you don't have to take the trade unless it sets up just the way you like it, right? So then what you do is you just you put the Fibonacci box on it and you look at it, okay? So I put the Fibonacci box on it right here at 8:10 when that hammer completed, that 8:05 a.m. hammer completed, okay? And I just watched it and I waited to see what would happen, right? I'm looking for a pullback to this zone, okay? The zone comprised of the 61.618 above, the 0.382 below, and the 0.50, the 50% in the dead middle, which is, a couple of, like maybe less than a tick, one tick away from the 77, okay? So here I am, I'm watching it come down, and I'm watching very carefully what happens when it gets to the 50% level, which is right here, this green line, okay? So I see that the red candles stop. I see a green doji. I see a green candle, a flat bottom green candle, which is a good bullish sign. There's a small red one. I'm waiting for MACD to turn up, and I'm waiting for like one or two more strong green candles, okay? So I got a couple more here, so I was comfortable going long. Right here, I got in like 278 and a quarter. And I waited, and I took it up almost to the blue line. You can see it came within two ticks of the blue line, but it didn't want to go up there, so I sold as it started rolling back over. Okay, down at 85 and a half. So that was a really, really good trade. It was only 7 points, but this is Globex, so you don't get a lot of points. You don't have to risk a lot either. I was only risking like maybe 5 points on that one. So I got 7 points out of that one, and that was a perfect example of what we've been talking about, right? Can you see how these trades do happen over and over and over again, and how they line up and you create confluence? Also, basis support here, this double bottom, right, at this down here at this level, which is kind of coinciding with this pivot right here. This one right. Strong pivots where you have a big candle up and a big candle down often leave a level, right? So if you take this across, you can see that we had a double bottom off that level, with the second bottom resulting in the hammer candle, the big strong green hammer candle. Now it's not continuing to go up, but I don't really care. I got what I need to get out of it, right? I put my Fibonacci levels on. I watched to see what would happen when it got to the 50%. It just so happened it coincided with the 77. And then we got the hook on stochastics down here, the entry, and the target was almost hit. There's 1 or 2 ticks off, which is totally fine, and go ahead and get out. So anyway, there's another example for you.